Hey there, welcome back to the charts. Today I want to discuss the Ethereum logarithmic regression trend line and the current pullback we've had from this sort of breakdown of this trend line and sort of rejecting off of that area there. So I've been actually working on this website for quite some time now, and I haven't been posting any videos because of that. And that's because it's fully live right now, and you can actually follow along with me if you want. So some of the charts are actually uh, not accessible to everyone, so you have to sign in to access some, and you have to. Some of them are pro charts because I spent a lot of time programming them, so some of them aren't free, right? So, but you can follow along on this chart. All of these are free up here, and some of the other ones up here that don't have the pro tags. So this is the logarithmic regression trend line. You can view it for Bitcoin, for Ethereum, for XRP. Some of them are generated dynamically based on just the actual price action itself. So some of them are fit to the actual data and manually by me, and some of them are actually generated, and there's some issues there too. So I need to fix that. So yeah, today I wanted to talk about the logarithmic regression trend line for Ethereum here. And as you can see, this is basically just a trend line, logarithmic trend line that basically fits the data to a curve. The red curve is the upper trend line, the bubble fit, and then the lower one, the green one, is essentially the non-bubble fit, and the solid line is the fair value trend line, which is essentially fit perfectly to the value of Ethereum. And as you can see, we've actually hit this green fair value trend line in the past in 2018, of course, the beginning of Ethereum's history, as well as in 2017 we hit it below it, and then in the pandemic crash we also hit it again, and as of recently we've hit it at when we hit around 1400 for Ethereum. We actually hit that again. So I actually discussed this sort of trend line in my previous video where I discussed how Ethereum was sort of not really breaking below the lower logarithmic regression trend line for quite some time and sort of holding this level of support here. And then it finally broke through around $2,000. And this is sort of a different trend line, but you can essentially see the same thing playing out here. Whenever Ethereum broke below this level, that's when Ethereum entered this fair value region for the logarithmic regression trend line. And as you can see, it's now actually rejecting off of that level right there, and that sort of corresponds to the SMMA here, which is the gold wave. It's also on the website over here. So if we look at the gold wave for Ethereum, we can actually see that it's actually gone below that level as well, and is still below that level, and is actually rejecting off of it right now. So no one knows exactly what's going to happen in the markets, but we can sort of use probabilities, and we can sort of use these trend lines to show exactly where resistance and support could be, hypothetically. But then again, no one really knows what's going to happen. If you look at the Ethereum Bitcoin valuation, which is essentially just dividing the price of Ethereum and Bitcoin, you get this trend line here, or this chart here, and you can sort of see that whenever you go into these blue regions, it corresponds to a bottom in Bitcoin or Ethereum Bitcoin's ratio, and you sort of have these red upper values where it corresponds to local tops or cycle tops for the ratio. And currently we're actually sitting around 0.022 for the ratio, which corresponds to a risk value of 0.12, which is still fairly low given the entire this entire distribution phase that we had up here. And by the way, this chart takes into consideration diminishing returns for each cycle. So it'll consider the fact that even though we didn't go as high of a ratio back in 2017 as we did in 2021, we still got up into that 0.9 to 0.95 risk level. which can be a really good indicator in terms of selling when it's high and buying when it's low, and dynamically DCAing or DCA selling out of the asset. So back over here, I was saying how the Ethereum Bitcoin ratio was extremely low, undervalued, and I actually in my first video that I posted, I actually said that I was converting some of my Bitcoin into Ethereum there, and that's not to say it's too late. I still think Ethereum Bitcoin is extremely undervalued. If you just look at this is the market cap division of it, but if you just look, if it's essentially the same thing. So yeah, if you see this right here, it's actually kind of projecting off of the 21-week EMA and the 20-week SMA. And you can sort of see that back in 2019, we actually did a similar sort of thing where Ethereum got this initial bottom, and then it sort of went up to the bull market support band, the 20-week SMA and 21-week EMA, and sort of rejected off of this level here. And then it made a double bottom here, but a higher low, essentially, which is actually extremely bullish for the pair, in my opinion. If we see the same thing happen this time around, where we sort of get that first bottom rejection of the bull market support band, and then we sort of see a higher low structure play out, then I think Ethereum definitely could outperform Bitcoin over the next couple months or so, and then out in 2026, the bear market year, essentially, we'll see it probably sort of go sideways from there. So yeah, I just wanted to provide an update on the Ethereum logarithmic regression trend line and how that relates to the risk metrics. And you can actually see it non-color coded. So if you sort of just take the color out of it and you just show the risk values themselves, you can see we hit around a 0.991 risk level in May of 2021, and then in the top and then 2017 we hit a top of around 0.14 114. So yeah, thank you guys for watching. If you guys like the content, feel free to like and subscribe, share, comment what you like.